Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Ladies and gentlemen, I'm on a mission to help 1 million people reduce risk in their lives. To reduce risk in your life, go to myworstinvestmentever.com today and take the risk reduction assessment I've created from the lessons I've learned from more than 470 guests. It's time you start building wealth the easy way by reducing risk. Fellow risk takers, this is your worst podcast host, Andrew Stotz from A Stotz Academy, and I'm here with featured guest Atul Sethi. Atul, are you ready to join the mission?
Yes, I am. Thank you, Andrew.
Yeah, it's great to have you on board. Let me introduce you to the audience. Atul is the founder and managing partner of Farnam Tree, an investment advisor based in Bangkok, which is currently under pre licensing. After graduating from the University of Chicago, he spent 12 years at Credit Suisse in the Chicago, Singapore, and Bangkok offices. He started as a junior investment banker and has been a bank analyst in their Thai equity research team. Atul left Credit Suisse this year and is focused now on Farnam Tree. And in fact, we have a little inside story that Atul was an intern with me in 2006. My goodness, so much has happened since then. Why don't you fill in a little bit of tidbits for the listeners about yourself?
Yeah, sure. Thanks, Andrew. Yeah, summer of 2006, I very vividly recall being an intern under you at City Equity Research in Bangkok, and thinking, my goodness, how did these guys wake up so early every single morning and do this? It was also during the World Cup, and I'm a big football fan. So that decisions from back then, whether to stay up late and watch the games, or pay the price the next morning when I entered the office. I had no idea at that time that I'd be doing the exact same job much later in my career. But it was a great insight into the industry, and I also remember how all of you in the office brought your A game every day, and that taught me a lot.
Mm.
Um, yeah.
It's it's a good memory going back there, and some of the people at least that are in that office are still very close business partners with myself. You mentioned one, Sonsak, we talked about earlier. He and I have worked together now for more than 20 years, and a lot of the people that were in that office have been friends for many years. So it was a fun time, and I think one of the things I loved about being an analyst and being a head of research is bringing the energy into the
Yeah.
room and bringing it to the client, bringing it to the salespeople, and to the team. And I just loved I loved almost everything about the job of being an equity analyst.
Yeah, the first half of my career at Credit Suisse as a junior investment banker meant a very different life. A lot of it was about cranking out pitch books, updating things as fast as possible. You learn a ton, very steep learning curve. But I would say it was only after I moved over to equity research did I then get an appreciation for the analytical side of things, and what you can learn from slowing down and digging through. So I very much, what you say about that very much resonates with me. I was lucky to be part of the Credit Suisse's Thailand research team here, which is highly ranked. It's full of all stars, and I learned everything I know today from them. Uh, yeah, it's
Yeah.
crazy how it's 2006. I was an intern with you. Did the same job in the same city. 10 plus years later, and here we are speaking now. I've noticed from afar the work that you're doing in helping people highlight lessons that people have learned. I've made mistakes along the way, so I hope to be able to contribute to that.
Well, you are right now contributing to the mission, and now it's time to share your worst investment ever. And since no one goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to it, and then tell us your story.
Sure. So the the one instance that I remember and would like to share was around 5-6 years ago when I did move after I moved back to Thailand, and I was based here and had a go at single stock investing. And my approach to finding a business to own was very much, I tried to adopt the Buffett owner mindset, to find a company with a big moat, huge competitive advantage, everything that ticks those boxes. So in Thailand, one business where you get that is in retail. I won't mention the specific ticker or the company, but I'll share. In the convenience store format, there's really only one big daddy in Thailand. So for me, looking at that business, seeing the monopolistic nature that they were able to operate with very easy to understand business, high returns on capital, been around a very long time, seemed like a slam dunk to me at the time. Now, the reason that I highlight this as being a grave mistake was not so much because I lost a ton of money on it, but rather because I glossed over one of the things that is very important in assessing a business, and especially if you want to take the view of a long-term owner, and that's looking at the people and corporate governance. So in this particular instance, I did all the hard work, crunching the numbers, looking at the financial statements, and understanding the business model. But where my analysis was deficient is I ignored some red flags on corporate governance. There was an insider trading. There was an insider trading issue that involved one of members of senior management. That's something that should have caught my eye. And there are also other instances, either within that company or within the group, where you see questionable corporate governance and decisions that make you wonder whether we as minority shareholders are being taken advantage of, or whether our interests are being aligned with the promoters. So I realized that the hard way. I realized that the hard way, and then after I decided that it's time to sell, and you can do something else with your money. Find another business that ticks the boxes. I made another mistake on the way out, which is which is your classic anchoring bias mistake, which is I bought the stock at, let's say, $100, and it was at 90. And I was telling myself, oh, I'll wait until it goes back up to 100 and then sell. You give me a time capsule, I'd like to go back and slap myself for that. But it was really, so it's more than one lesson that you end up learning, I feel, through experiences like this. And that one was, don't anchor to the price. This is a ownership stake in a business that's quoted at some price on the market. If if those funds are better off in cash or better off in another business, it really shouldn't matter what your purchase price was.
So how would you describe it? Is that the lessons that you learn? How, for the listener out there?
Yeah, the two big lessons is, one is is not paying attention to the people,
Yep.
and the other one was suffering from uh, from a from a from a behavioral bias
Yep.
that is very easy for all of us to succumb under.
It's maybe I'll share a couple of things. I know one of the things as an analyst since 1993, particularly back in the old days when it was the only people that would talk to you when you were an analyst in the early 90s or mid 90s was, you know, the punters that were at the brokers. So the punters would come to the brokers and they'd sit there all day. And so when an analyst would come down, they'd want to ask you all kinds of questions. But the most common question was, I bought this stock at 100. It's down to 40 now. What should I do? And, the before, if you just ask them some more questions, they're going to tell you, I'm planning on waiting until it gets to 100 to sell it. And
Yeah.
it's such a common bias. And I think that the lesson that I learned from all that is that I like to use zero-based thinking, whereas saying, okay, imagine that money is cash right now. Would I deploy it into that company? Does that company have the best prospects over the next 3 to 6 months? And that's the way I try to solve that particular problem. The other thing that you talk about corporate governance in Asia is kind of interesting because, in America, when you think about corporate governance, it's like a bad CFO or a bad CEO where they're taking advantage in a public company or whatever. But when you think about Thailand and Asia, you just think that, there's corruption throughout many companies, and there's families running almost all of these companies. And some of them are siphoning stuff, or before the company was listed, they may have done a lot of that. And so it becomes a lot more complicated because it's a lot more difficult to find like a perfectly clean company. And therefore you're stuck in a situation where sometimes you will ride with some sort of corporate governance issue that you may not tolerate if you were investing in, let's say, a Western market, but you may kind of have to tolerate in a market like Thailand or maybe China or whatever. If you say, I'm never going to invest in anything where there's a corporate governance issue, it's very, very few. And that just is a dilemma that, you made me think about. And, there's a lot to it. So anything you would add to that?
I very much agree. I think it's a tough pill to swallow to go, everything else is great, all the boxes are ticked, but there's something I can't get comfortable on, on corporate governance, and therefore it's okay. I think when it's an item like this, in more instances than not, it's not okay.
Yep.
Because the world is, auction-driven markets are super unpredictable, and investors we open ourselves up to so many different variables that can impact both business fundamentals and valuation. This is to put this on top. I think can really exacerbate the risks.
Yeah.
Whereby it's something you're not comfortable with, then it's much easier to just put it to the side, because there's many ways to skin a cat as far as investing goes. But I think for one of the best strategies is the one that you can go to sleep at night soundly with. Yeah. Going to sleep at night wondering whether you're going to wake up and see a headline of related to corporate governance is not something that is not a position that I would like to put myself in. And I think that's something that that is not too difficult to avoid if you do the work.
Yep. Yeah, in this case that you're talking about, which I happen to know about, it was so brazen, that it's hard to avoid. So based upon what you learned from this story and what you continue to learn, What one action would you recommend our listeners take to avoid suffering the same fate?
Yeah, I'd say the overarching lesson is to be objective, and I think the way that has helped me, and I think the way that can help listeners or anybody is to just write things down, write things, whether it's journaling or just these are the reasons why I like, why I don't like it. You can't lie to yourself if you're writing something on a piece of paper.
Excellent advice for the listeners out there. Having a notebook, having a place that you write it down, that you can go back to and reference. I think it's really, really great advice. So, what's one resource that you'd recommend to our listeners, that they could benefit from?
Well, I spoke a bit about biases and the behavioral side. There's a series of investing books called The Little Book of Something. There's one that's The Little Book of Behavioral Investing,
Yeah,
written by James Bontier. That is my jam.
that's a great
And
one.
the anchoring bias that I spoke about, that's one of several things. It's a short book, and I that would be like the one thing that the one resource that I would highlight that's very easy to digest and relatable for anybody interested in these subjects. Uh, I have a reading list up on our Farnam Tree website.
Mm,
Uh, where given our current status and process in applying for a license with the regulators, there's not too much information on it, but there's a reading list there of books and some resources that have greatly helped me, and I would encourage anybody to look at that. James Montier's book is there, and so is like Peter Lynch. With the greatest takeaway or lesson that I learned from Peter Lynch and his teachings is just invest in what you know.
yeah,
And
yeah,
that ties back to being able to sleep well at night. Because if I'm invested in I don't know, some hydrogen fuel, some new technology that sounds really, really sexy, but if I have no idea how it works, that's a recipe for disaster.
mm, yep, great advice. And we'll have a link to the website in the show notes so you can go and check out the book list and reading list. I think your recommendations are spot on. And Peter Lynch, the thing that always got me about Peter Lynch was that, like, if you think about Buffett or if you think about Benjamin Graham, they were kind of focused in on one thing, and things like, buying things at a deep discount. And okay,
Yeah.
Buffett started to change from that, high quality companies.
Mm.
But Peter Lynch just looked at anything. And he built this eclectic portfolio of things that, now, I mean, you could look at Buffett's portfolio and say, yeah, he's got a very different things, Coca-Cola, and he's got a train company. But with all of those have the same thing in common: high quality brand, a moat, a really high gross margin. But Peter Lynch was just like into anything, and if it was just in an uptip in an industry, he may ride that for 3 years and then he's out. So he was really, really amazing. So great recommendations there. All right, last question. What's your number one goal for the next 12 months?
Would be to get our licensing uh, to get our licensing set up, get our structure and everything ready so that we can share our service with investors in Thailand and hopefully present a solution or a way of investing and managing portfolios that addresses some of the problems that I personally faced for the most of the last decade being in this country. So I'd say that's our main goal for the next 12 months. But I would say outside of that strictly professional vision would be to continue learning and continue the reading. It never stops.
Mm.
So to just keep on hitting the bat.
Yep. That's exciting. So yeah, keep learning. That's the challenge for all of us. I mean, every single episode I do, I learn more. I did my PhD when I was 50 years old, and I'm constantly reading. And nowadays, you find yourself reading medical research to understand what's happening and all of that stuff. So keep reading. Well, listeners, there you have it, another story of loss to keep you winning. If you haven't yet taken the risk reduction assessment, I challenge you to go to myworstinvestmentever.com right now and start building wealth the easy way by reducing risk. As we conclude, Atul, I want to thank you again for coming on the show and into our mission. On behalf of A Stotz Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
Well, thank you very much for having me. Uh, I I this is a bit like a blast from the past. But no, thank you so much. And I am and have been a consumer of your podcast and the content for a very long time. And I've learned a lot from that. As I mentioned to you before we started, the breadth of material and the examples that you have is truly awesome. So I hope more and more people get access to it and learn from it.
Boom. And that's a wrap on another great story to help us create, grow, and protect our wealth. Remember, ladies and gentlemen, this podcast is about one guest, one story, one mission to help 1 million people reduce risk in their lives. Fellow risk takers, this is your worst podcast host, Andrew Stotz, saying, I'll see you on the upside.